Hello everyone. Here we'll solve the accounts of 12th Commerce. Problem number 10 of chapter 1, Introduction to Partnership and Partnership Final Account. Problem 10 given on page number 61-62 of the textbook. Here Shipra and Manish are the partners sharing profits and losses in their capital ratio. So we'll see the capital, their profit sharing ratio based on their capital. So here is the capital given. Capital amounts are 90,000 and 30,000. The ratio will be cancel this 4 zeros, this 4 zeros, 3 ones are 3, 3 threes are 9. It means 3:1 will be their profit sharing ratio. It means 3 upon 4 and 1 upon 4. So this will be their profit sharing ratio, and what you are required to prepare is you are required to prepare trading account and profit and loss account for the year end 31st March 2019 and balance sheet on that date. So in this way we'll prepare our accounts in the books of Shipra and Manisha. First account will be our trading account till the closing lines, and then profit and loss account. After this, as the question shows partner's current balance too, so we'll go for partner's current account and balance sheet on 31st March 2019. Let's start with the problem. We'll mark out the adjustments first. The first adjustment is about closing stock that we don't mark. Next is about sales, include sale of machinery 2000 which is sold on 1st April. So adjustment on sale, mark the sales. Third one, depreciation on fixed asset 5%. So find out the fixed assets. Furniture, plant and machinery and building. So 3 are or fixed assets. Depreciation on it. Fourth one, each partner is entitled to get commission at 1% of gross profit. This adjustment can be done as and when we get gross profit. And further it is written that interest on capital 5% per annum. Interest on capital. So on capital. Next is fifth one, outstanding expenses, wages and salaries. So mark wages and salaries here. Last, create provision for doubtful debt at 3% on debtors. So mark the debtors here. In this way our markings will be done. Next is to transfer the items from the balance sheet to the respective accounts. So let's start. First is sundry debtors. Sundry debtors, balance sheet asset side, and the amounts will be written in the inner column as it carries adjustment. Next is purchases, trading account debit side in the inner column as we deduct purchase return out of it. Next is furniture, balance sheet asset side in the inner column as it follows adjustment. Plant and machinery, balance sheet asset side in the inner column as it carries adjustment. Wages, again trading account debit side in the inner column as it carries adjustment. Salaries in the inner column of profit and loss account debit side. Next is discount. Discount shows debit balance in the trial balance. Therefore, it will be transferred to the profit and loss account debit side. Bills receivable, balance sheet asset side, outer column without adjustment. Carriage outward, profit and loss account debit side. Postage, profit and loss account debit side. Sales return. Sales return is deducted from the sales and it is written to the credit side of trading account. Next is cash in hand, balance sheet asset side. Cash at bank, balance sheet asset side. Outer column without adjustment. Insurance, profit and loss account debit side. Opening stock, trading account debit side. Trade expenses, it is written to the debit of profit and loss account. Trade expenses or general expenses forms the part of office and administration expenses that are incurred for making and implementing the plans for efficient running of business and maintenance of office. Therefore, it is transferred to the profit and loss account debit side. Warehouse rent, profit and loss debit. Advertisement, profit and loss debit. Building carries adjustment. So, balance sheet asset side, inner column. Coming to the credit balances of trial balance. First item is sales. Trading account credit side in the inner column. But here for the sales, we will leave lines for two of the adjustments, as we deduct sales return out of it, and one more adjustment is given on the sales, which is wrongly return something. So we will leave 3 to 4 lines after sales, or after sales leaving 1 or 2 lines, we will directly deduct the sales return. Next is rent, profit and loss account credit side, sundry creditors, balance sheet liability, purchase return deducted from the purchase which we already have returned to the debit of trading account. Discount shows credit balance, therefore profit and loss account credit. Bills payable, balance sheet liability, capital account, balance sheet liability. Current account is transferred to the credit side of partner's current account, writing by balance brought down. So in this way, we will transfer or the items given in the question. See, I have deducted purchase return out of purchase and got the amount outside, and in the sales amount is written in the inner column, leaving a line for the adjustment. We deducted sales return. We have written sales return as 500 and partner's current account in this way, balance sheet in this way. Let's start with the adjustments. The first adjustment is about closing stock. First effect trading account credit side, and second effect balance sheet asset side in this way. Trading account credit side by closing stock 37,000 and balance sheet asset side closing stock 37,000. Next is regarding sales. Sales includes sale of machinery of rupees 2,000 which is sold on 1st April 2018, and we are preparing the accounts for 2019, means it is wrongly recorded. Therefore, this 2,000 sales will be deducted to the credit side of trading account from the sales. So by sales is already written, out of it less machinery sold which is wrongly recorded. So rupees 2,000. Now from this 12,000, deduct this 2,000 and also this 500 and take the amount outside. 117,500 will be your sales amount to the outer column. The next effect, plant and machinery. Machinery is wrongly recorded, therefore plant and machinery will be affected. So to the asset side of balance sheet, we will deduct the same amount less sold on 1/4/2018 and the amount is 2,000. So this 2,000 will be deducted from 60,000 and keep this 58,000 in the inner column only, because we also have to go for the depreciation of plant and machinery. In this way we'll do. Trading account credit side, we have deducted 2,000 from the sales, and after all the calculations we got 1,17,500 in the outer column of sales amount. And second effect, we did asset side of balance sheet, we have deducted 2,000 from the plant and machineries amount and we kept the 58,000 in the inner column only. Next adjustment regarding depreciation on fixed assets. We do have three fixed assets in the question: furniture, plant and machinery and building. So on all these three fixed assets 5% depreciation. In this way, depreciation on furniture, the amount of depreciation is 38,500, 5% of it, so cancel this 2 zeros, 385 into 5 will be 1925. The depreciation on building, amount of building is 20,000, 5% of it, cancel this 2 zeros, 200 into 5 will be 1,000. Now depreciation on plant and machinery. The plant and machinery's amount after deduction of wrongly recorded sales was 58,000, so 5% of it, Cancel this 2 zeros, cancel this 2 zeros. It will be 580 into 5 will be 2900. So these amounts of depreciation, furnitures, buildings and plant and machineries, will be deducted from the respective amounts in the asset of balance sheet. So here I do have balance sheet. First of all, furniture. So furniture is here, less depreciation at 5%, and the depreciation amount of furniture was 1925. 1925 will be deducted out of 38500, and you will get 36575 in the outer column. Plant and machineries depreciation, less depreciation 5%, and the amount of plant and machineries depreciation was 2900. So 2900 in the inner column. Deduct this 2900 out of 58,000 and 55,100 amount in the outer column. The next depreciation was on building, so less depreciation, and the amount of depreciation on building was 1000. 1000 will be deducted out of 20. You will get 19,000 as final amount, outer column. The next effect of all these adjustments will go to the profit and loss account debit side, writing to depreciation on furniture, to depreciation on plant and machinery, to depreciation on building, and the respective amounts in this way. The next adjustment is regarding fourth one. Each partner is entitled to get commission at 1% on gross profit. So when we get gross profit, we can do this, and interest on capital 5% per annum. So interest on capital we can do now. We are having two partners, Shipra and Manisha. So Shipra's capital is 90,000. 90,000's 5%. 90,000's 5%. Cut this 2 zeros. 900 into 5. See how much comes? 4,500. 4,500 will be the interest on capital for Shipra, and go for Manisha's capital to interest on at this 5%. So 30,000 into 5 upon 100. Cancel this 2 zeros. 300 into 5. It will be 1,500. So this 4,500 for Shipra and 1,500 for Manisha. Where do we transfer this? The first effect goes to credit of partner's current account, and second effect debit of profit and loss account. Same for this. Here credit of partner's current account by profit and loss account, respective amounts in the respective partners columns, interest on capital, and here to the debit side of profit and loss account, writing to interest on capital, Shipra 4,500 and Manisha 1,500. Next is regarding outstanding expenses. Outstanding expenses, wages 200 and salaries 500. First we'll go for wages. Outstanding is always added, and wages we already have returned to the debit of profit trading account. So from this trading accounts wages amount, we will add this 200, and second effect goes to the balance sheet liability side, writing outstanding wages. Same for the salaries. Salary is written to the profit and loss account debit side. So add this salaries outstanding, that is 500, to the salaries, and transfer it to the balance sheet liability side, writing outstanding salaries 500 in this way. Wages outstanding is added, salaries outstanding is added, and the amount are taken out. This 200 as an outstanding wages and 500 as an outstanding salaries is transferred to the balance sheet liability side. Sixth adjustment, create provision for doubtful debt at 3% on sundry debtors. The amount of sundry debtors was 28,000. So 28,000's 3%. calculate this, cancel this two zeros, 280 into 3. You will get 840. So what to do with this 840? It is provision on doubtful debt. It is provision on doubtful debt on debtors. So it is deducted from sundry debtors in the assets and it is transferred to the debit of profit and loss account, writing to provision on for doubtful debt. In this way, it is deducted from the debtors. After calculation, the amount is taken out to the debit side of profit and loss account, writing to provision for doubtful debt, 840 rupees. After all this adjustment, we'll go for the closings. Here the marked area is our trading account, so we'll close the trading account. We'll take the total of credit side first. Credit side's total is 1,54,500. Take the total of debit side, outer column. The total of debit is 72,800. Now the lesser amount will be deducted from the greater amount. First, credit side's total is greater. So the total of credit side will be written here to the closing box of credit side. It is transferred to the opposite side's closing box, and after getting difference, deduct this amount out of the greater amount. You will get 81,700 as a difference, which we call it as gross profit, and this 81,700 is written here and writing to gross profit in this way. See, the total is written in the totals box, closing box. It is transferred to the opposite side. The difference is written up and it is named as to gross profit carried down. After this, it will be transferred to the opposite side after closing lines by gross profit carried down, 81,700. Now, as I told you, whenever we get gross profit, we will go for the commission on gross profit. As we were having fourth adjustment. Each partner is entitled to get commission at 1% on gross profit. So the amount of gross profit is 81,700. Calculate 1% of it. Cancel this two zeros, 817 into 1 is 817. 817 will be the amount of gross profit commission. It is transferred to the debit side of profit and loss account, writing to commission on gross profit, Shipra's 817 and Manisha 817. In the same way, second effect, partner's current account credit side by profit and loss account, Shipra 817 and Manisha 817. In this way. It is written to the debit of profit and loss account to commission on gross profit, and in the same way it is transferred to the partner's capital credit side. After this, we'll close profit and loss account. Now, take the total of credit side. Credit side's total is 84,000. Take the total of debit side, the outer column. The total of debit side is 27,599. As credit side is greater, write the total of credit side here in this closing lines, closing box. Transfer the same amount 84,000 here and take the difference of it. The difference will be 56,401 and it is called as net profit. This 56,401 will be written up 56,401 and it is written as here to net profit, which is to distributed amongst two of the partners in their profit sharing ratio. The profit sharing ratio we calculated as 3/4 and 1/4. So calculate this for Shipra. You will get 42,301 and for Manisha 14,100, which is to be written here in this way. You can see the total is taken as 84,000. It is transferred to the opposite side. The difference is written up and it is distributed amongst two of the partners, writing to net profit, Shipra 42,301 and Manisha 14,100. Now, this net profit to be transferred to the credit side of partner's current account. You can see here as an highlighted mark to the credit of partner's current account. After this, we'll close partner's current account. Take the total of Shipra's column first. No item written in debit side, therefore credit side is greater. The total is 52,618. Transfer this to the opposite side in the closing box, 52,618. Nothing is to deduct out of it, so this only will be written up 52,618 and it will be named as to balance carried down. In the same way, Manisha 19,417, transfer this here, 19,417. The same will come up as an balance, closing balance 19,417. In this way, this balance is transferred to the liability side, writing current account Shipra 52,618 and Manisha 19,417. Now take the total of asset sides. It will be, asset sides total will be 2,40,235 and take the total of liability side. It will also be 2,40,235. It means the assets and liabilities gets tally. So in this way, your whole solution will be in this way with some adjustment, with some working note on it. Okay, that's it. Thank you.